Good morning. The week is half done and we're seeing shares. Wait, there's a problem here. Yep. Well, we're seeing shares up, bonds not so badly up, and shock in high places as Americans await the potentially stock-invigorating $1,400 stimulus checks. The Nasdaq made a dramatic recovery yesterday, rising 3.7% as bid buyers snatched up underpriced tech stocks. AMD pushed the index with shares up by 6%, Nvidia by 8%, and Intel by 4.7%. The Dow was less impressed with a mere 0.1% increase, and futures are down drastically this morning ahead of tonight's 10-year auction. Back to the Nasdaq, and after completing its double bottom, we're looking at a bearish engulf at the top, a flattening of the RSI well below its overbought, and the MACD, which seems to have flattened out as well. Where does that leave us? Well, yesterday the yield on 3-year bonds doubled to 0.36%. Remember that compared to $3.6 trillion in treasuries printed in 2019, about 3.6 was sold in 2020, and about 4 trillion will be needed this year to cover relief packages. Yesterday's Red Book saw same-store sales contract by 18% month-on-month. This afternoon, mortgage data followed by consumer inflation and earnings at 1:30, and tonight, stand by for that market-managing 10-year auction. At 3, Canada's central bank will have an interest rate update. We're expecting to hold at 0.25%. In expectations of things to come, European shares are already reversing into the red this morning. Benchmarks had their best day in 4 months yesterday as car makers and banks lifted Holland's AEX by 1.24%. The DAX was behind with an unimpressive 0.4% and the FTSE 0.17%. The mood was apparently upbeat on the OECD's report that vaccine rollouts would hasten the zone's economic recovery. The euro continues down after EU presented a disappointing 0.7% GDP contraction month-on-month, which lowered the yearly count to 4.9%. And with little economic news aside from Buckingham Palace's promise to investigate accusations of racism, the pound is down as well. Zero Hedge this morning reports that the EU is launching legal actions against the UK for infringements of the Brexit deal. These focus mainly on easing the Irish backstop so that goods can cross from England to Northern Ireland. Asian shares are up from 2-year lows this morning, except in Korea and Australia, as Westpac showed last night a 2.6% increase in consumer sentiment for March. The Nikkei remained almost flat due to a sudden sell-off in tech stocks by investment funds. On the other hand, building approvals were down nearly 20% month-on-month. In China, producer inflation for February was up by an impressive 1.7% year-on-year after contracting last month. This is U.S. and China officials as set to meet in Alaska. Bitcoin continues up despite Twitter's banning of several important related accounts. Last month, Coinbase was temporarily banned, then returned. Then, as now Twitter declined to explain, oil is down for its 3rd session in a row after the API reported a devastating 12.8 million barrel rise in stockpiles. Elon Musk is breathing a tad easier today after Tesla surged by nearly 20% yesterday, thanks to an 18% increase in China sales. Bezos less so, as the U.S. House of Representatives yesterday approved protection for unionizing. China Telecom has been blacklisted in the U.S. and it's planning a $4 billion listing on the Shanghai Stock Exchange. According to Reuters, that represents about 13% of its base. With WandaVision behind us for now, Disney Plus has announced it's hit the 1 million subscriber target. That's 16 months after its launch. Also, Boeing reportedly sold more aircrafts in February than it had cancellations for the first time in nearly a year and a half. And Vodafone is expecting to raise nearly 3 million euros by floating its infrastructure. The Vantage Towers IPO will be Europe's largest in 2021 so far. Well, I'm sure you're all wondering where we're going from here. Come back tomorrow and I'll tell you.